Broadcasting from the Business RadioX studios in Atlanta, it's time for Dental Law Radio. Dental Law Radio is brought to you by Oberman Law Firm, a leading dental-centric law firm serving dental clients on a local, regional, and national basis. Now, here's your host, Stuart Oberman.
Welcome, ladies and gentlemen, to Dental Law Radio. Unbelievable guest speaker today. Unbelievable on the podcast. Danielle McBride, partner in Oberman Law Firm. And little brief background. Danielle's been practicing for about 21 years. Specialty market is dental law, mergers, acquisitions, tax, compliance. And we're going to drill down on a couple things today. I know that Danielle's probably done a couple hundred transactions, if not thousands, in her illustrious career. And I know she's going to have a lot of insight into this, but I get this question, what do I need to consider when preparing for sale? So what I want to do is, Danielle, I want to leverage some of your experience here and expertise. And I want to run through about 5 things to consider when preparing your practice. We're talking to a dentist for sale. So let's run through a couple of things. And it's sort of a reoccurring theme. Our doctors get into trouble. They're not prepared. Number one, give me number one. What's a number one issue we see in preparing for practice sales that are sometimes problematic?
Sure. So number one is the due diligence and getting that in order. And that means understanding the business and your numbers. Cash flow or profitability for the practice. What you sometimes hear in DSO language is EBITDA, and that's the key to practice valuation and practice transition. You need to know your numbers, your discretionary expenses, those add backs in the practice. You need to take a look at your biggest expenses like staff, supplies, laboratory expenses. Knowing, fee increases. What's your fee schedule? I get, we get questions for fee schedule and when's the last time you increased fees on things? And that's a key thing right now with inflation. You want to also make sure that you're not letting those fee increases lapse and not doing something from year to year as well to kind of keep up with things. Marketing, website, social media stuff, patient numbers, active patients, new patients, PPOs and referring doctors if you're a specialist. All of those are due diligence items that are going to be requested by buyers, whether they're private party, individual dentist buyers, or whether they're DSO transactions. And the DSO transactions, they're much heavier on the due diligence. They will ask for every piece of paper you could possibly come up with in these transactions.
Plus,
so getting those things in order ahead is key.
I got a question. So, profitability and EBITDAs. And so, look, our doctors run a lot of stuff through their practice that they shouldn't, and they get into trouble, and it affects their numbers. What are some of the things that you see, before we jump to number 2, what are some of the things that you see doctors running through practices that they really need to clean up to get their numbers in order?
Sure. A lot of it is things like running office expenses and personal expenses through the practice. And so it's easy to see. Yeah. Never happens. They don't go to Home Depot and buy toilet paper and paper towels for the office and home. So a lot of times they're running things like that through the practice, and they don't separate the receipts out. And so it's getting lumped into categories like office expenses or promotional expenses, things like, sponsoring some of your kids' events, and you write it off through practice promotion. That's
pay your
great
children,
when a
right?
buyer goes to
how do they
look.
pay their children?
What's that?
How do they pay their children?
A lot of them pay their children. Put your kids on the payroll. You should be putting them on the payroll as soon as they're old enough, maybe 6, 7 years old. Have them, reaching the lower filing cabinets or, modeling for the website. Have them mow the lawn for the practice and get them IRA contributions.
That's good.
So
that's wow.
Yeah. So, kids on the payroll. There's a lot of spouses on the payroll too. And sometimes they're paid, sometimes they're underpaid, sometimes they're overpaid. And, those are things that go into profitability on the practice as well. And you don't necessarily, those are the easy things to see. The harder things are when they're running all this stuff through office expense and they're like, yeah, $50,000 of it is just me running personal expenses through. Well, that's hard to, for a buyer to accept that. Okay, well, the profitability is really $100,000 higher than what's showing up when I'm looking at your typical ad backs.
Yeah.
Your promotional, your practice promotion expense, auto, car, meals, travel, continuing ed, staff or family on the payroll, those sort of things. Those are all pretty easy to see. It's the other things that really need cleaned up sometimes, because it's going to be hard to explain to that buyer unless you start showing them all your credit card statements.
I know you made a best friend out of all of the underpaid spouse managers.
Yeah.
You just became a absolute cult hero. I could tell you that. So, well, that's good. That's definitely good stuff. That all affects the profitability. And we also have seen some audits from state and federal on expenditures that are never good like that. So, give me number two. Give me number two on things.
Number two
consider, yeah,
is the lease. Everyone always forgets about the lease and waits till the last minute. So if you're preparing for a transaction, get your lease out. Look at what the terms are. Find out if you've got to get consent from your landlord to sell. Find out what happens if you have a personal guarantee on that lease. If you're going to assign the lease, if it's a third party landlord, make sure that that you've got under control your lease. You want to make sure that you know what the terms are. If you're up for a renewal and you're thinking about selling your practice, there are lots of things that you could try to work into that lease with the landlord, to try and prepare for a practice sale. Perhaps even getting something into the lease saying that you don't need their consent to sell, to transition the lease to that buyer if you're selling your practice. I've run across lots of leases over my years with third-party landlords, and it can be a real headache. And that is the single biggest reason I get a transaction delayed. Is that, oh my God, we don't have the lease assignment from the third-party landlord.
Now, are you seeing, and we're seeing this a little bit coming west to east, are you seeing that which a landlord does not have to do, end the lease early, that they want a percentage of the sale to do that? We're seeing some interesting numbers coming through that.
Yeah, I've seen some. It has been more of a West Coast issue that I've seen this in. In Midwest and Northeast, I haven't seen a lot of that with a percentage of the sales. In New York, I have had a few transactions where we've had to try and buy the landlord and essentially pay them something in order to get a seller out of a lease.
That's called legal
I had
bribery.
a transaction like that. Yeah. Yeah. And it's the New York leases. They're a lot of fun. Let me tell you.
Wow. What usually starts in the West comes East. So I think we'll be seeing that eventually, but let's number three. That was a great number two. We got cash flow number one and lease number two. And what are we looking at? Maybe the third issue.
Number three is staffing, Goodwill Transition, patient retention issues. So you want to be able to transition the practice well. And some of the key things are not just the doctor transitioning to the new doctor, but also staffing and patient retention. And so a lot of times the Goodwill transition is a key component. And sometimes that's where I see negotiations kind of get a little stuck from time to time, is that the buyer wants to make sure that the seller and the staff are going to contribute to the transition and make sure that, that the patients can be retained, that there's going to be an introductory letter or a letter to referral sources if it's a specialty practice, introductions maybe with the top 5-10 referral sources, making sure that the staff is going to stay in the transaction. and that you're not going to lose and have a bunch of staff turnover right at the transition date. And now you're trying to retain patients, but you've got all new faces in there.
What about associate issues?
Associate issues as well. That's another key thing in staffing, is that if you've got an employment agreement, or you have associates working in the practice and you didn't have an employment agreement with them and there are no restrictive covenants, your buyers are going to be coming in and they're going to be asking for those associates to sign contracts.
Yep.
And if you didn't have one before, you've got nothing to actually assign, which means a new negotiation with that associate and potentially with the buyer. And if they're a key producer in the practice, especially in these big DSO transactions, they're offering this money for the transaction based on key production numbers. And if you've got an associate that is not going to stay with the practice, or that you can't enforce a covenant not to compete for, in order to prevent them from competing with the buyer, then you're going to have some things you're going to have to negotiate, and it could really create some problems.
Now, question for you: when you do your practice evaluations, and you do a great job on that, does the associate not staying affect the value of the practice when you're asked to evaluate what that practice is worth?
Sometimes. It depends on the circumstances.
That's a great
in the practice.
legal answer. That's
it
a
really
typical
depends
answer.
on facts and circumstances. Yeah. And the key is going to be whether or not the practice can find a replacement associate easily, or whether or not the practice owner or the other doctors working in the practice are able to pick up that profitability. Or to pick up that production from that doctor who's not going to stay.
Staff. Wow. Mm-hmm. Let's look at a number 4. Give me the number 4.
Number 4, equipment, assets, and curb appeal. And a little bit of this is about allocations as well. You've got goodwill and you've got tangible assets in the practice. And so one of the things, if you're thinking about putting your practice on the market, there are some practices out there that maybe they haven't updated with newer equipment, or, they've thought about refreshing their waiting room, or adding a new, adding a CEREC machine, or, adding a major piece of equipment, and they haven't done it yet.
Picking up that 179 deduction, right?
Yeah, you can get the 179 deduction, so you can buy it and you can write it off all in the same year. In part, that's a buyer. In part, it's a seller problem. In part, it's a buyer problem. And so there's a little bit of a fine line you walk between whether or not you go ahead and make some of those improvements to make the practice more attractive to a buyer, or you say, I don't want to invest in a lot of super new technology and go into debt just to be able to make the practice. I'll take that into account when I value the practice. I'm going to look at what the equipment is and how much it's valued there. If the practice is not, say they don't have electronic records, everything's still on paper in boxes, and computer systems haven't been upgraded. There are some minimum requirements for computer systems to be upgraded that most buyers are going to ask. And so those are things that are going to go into negotiating the ultimate purchase price that a buyer is going to be willing to pay. Now, some of it's a seller's problem, some of it's a buyer's problem. If you want to be super fancy and buy all the latest and greatest technology, buyer, go ahead. That doesn't mean I don't have a practice that's fully capable of supporting you working in it. And you can make whatever changes you want to make on your dime. But there are some things that a seller might want to do just to make things a little more attractive for a buyer.
Well, and then we had Dr. Richard Maddow on a couple episodes ago, and he had a good talk about doctors buying equipment and profitability, and does he need that, and that was interesting analogy, and how that just compared to what you said regarding
don't go into debt to make it. Don't go into debt to make it appealable or attractive to a buyer. But there are some things that you could do, especially if you're looking at a year or two out from a practice sale, and making a few revisions here or there. You can write these things off. 179 depreciation deductions, bonus depreciation, etc. So.
That is practical advice, which a lot of times I think doctors are missing from the advisor standpoint. Let's talk about a number, the last number 5, and these get a little sticky in the contract areas. Also, it's
Yes.
this is where sort of the rubber hits the road, and talk about it. A number 5 on some of these.
So number 5 is my accounts receivable, prepaid accounts, patient credits, and treatment in progress.
Yeah.
Now, there is no one size fits all on any of those. And often, often they wait until the last minute to look at these. Oh, I'll get you this report. Oh, I'll look and see. Or, they run the report and they don't pay attention to it.
Famous last words.
Yeah, I mean, patient credits, in particular, your accounts receivable, aging, you may have things that are sitting on the report if you haven't cleaned up your collections, if you haven't cleaned up your patient credits. Those are all things that can go into, the ultimate, purchase price. If someone's going to purchase your accounts receivable and take over the practice, and then your prepaid accounts, and it can vary based on specialty. Obviously, in orthodontic practices, you've got long-term contracts with payments that may have been paid in full, contracts paid in full at the start of treatment, but you've got a buyer that's doing, say you had a bunch of patients pay right before the closing, you got all the money, but the buyer's going to get, seller got all the money, but buyer's now going to have to do all of the work to finish those patients. And so there oftentimes has to be some sort of adjustment to price or proration on prepaid contracts. And there can be other specialties as well, or even general practices that maybe do some, particular restorative type work or something that will have treatment in progress and prepaid treatment that is long-term patient treatment planning, where you've got courses of treatment that last for multiple appointments over a longer period of time, with maybe episodes of healing required in between. And you've got, someone who's got a $10,000 case that's being paid, on a monthly basis, because that's the arrangement they entered into with the doctor there, and their treatment is maybe a quarter of the way done. You've got to actually think about those things. And oftentimes we add exhibits to the contract that will list patient credits, patient refunds having to be made prior to closing, prepaid cases being prorated between buyer and seller.
Do you have to give special
progress list being done?
Do you have to give special consideration in contracts when you have that seller who's leaving and you've got, open cases, or what happens if you got, 100 patients come back from faulty work? What happens with that?
Right. And that's where we have provisions in our contracts that usually deal with what happens if there's defective work or rework. And can the buyer, as a seller, you don't want the buyer to just say, well, I have to redo all of this work and now you owe me this money, and it goes on indefinitely. Mm-hmm. There are time limitations that should be put in. There are requirements, there are parameters that should be set. And this is all based on the facts and circumstances of the practice. You may have some practices where this isn't a problem because you don't have patients that are, that are not paying when they receive their treatment.
Danielle, that great stuff about the patient credits. One thing and redos. One thing I want to do is I want you to elaborate a little bit more on the contract side, as far as what happens when, you've got a doctor that maybe is sticking around for a year or two. I mean, you mentioned earlier about limits in contracts and redos. Elaborate just a little bit more on that contract provision. What should be on there to limit the seller's liabilities going forward?
Sure. I mean, the seller should limit the liability going forward based on, some parameters for patients. You can't just have patients who have not been seen in the practice for the last year coming in to have rework done, or having the buyer not consult you about rework before they agree to retreat a patient, and then charge you for the fee to redo the work on that patient.
Wow.
Sometimes I see caps or limits set. Yeah. I mean, generally speaking, accounts receivable, patient credits, they all should be reviewed and wrapped up in your records. Your accounts receivable and credits should be cleaned up prior to a sale.
Yeah.
You want to make sure that you don't have long outstanding credits there. Maybe there are patients that you don't even have in the practice any longer. A lot of practices are in the habit of not cleaning those up on an annual basis. So clean those patient credits up, because you're going to have to pay them off. Generally, a buyer will ask for them to be paid off prior to closing. The DSOs also take that into account when they're factoring in, expenses to be paid and credits if they're going to be assumed. You don't want to be giving the buyer money that's never gonna come in.
Yeah, well, it's interesting. For 50 DSOs, you'll have 50 ways of calculating all this. That's amazing.
Yes.
Well, I tell you that is five great things to consider when you're preparing your practice for sale. And all these are obviously a moving target as the transition takes place. I mean, these are just moving targets, and there's constant adjustments. Well, Danielle, amazing stuff as always. Just again, 5 topics that our doctors just have to consider on any transaction. Also, honestly, this can be applied to any business listeners also on what they're looking at, whether it's just the AR or, cash flows, profitability. So really everything you've talked about, today and in previous podcasts, I mean, any business owner really could use. So amazing stuff. Well, great job, Danielle. Thank you very much. And as always, amazing knowledge. And we really enjoyed having you on the podcast today, and I know our listeners did. So, with that, we will call it a day, as we say. If you have any questions, please feel free to give us a call, 770-886-2400. Danielle, how do they get in touch with you if they want to send you an email or request some information?
They can send me an email. They can call the corporate number. They can also send me an email at Danielle@obermanlaw.com.
Good. Yeah, number's 770-886-2400. My name is Stuart Oberman. It is Stuart@obermanlaw.com. Thank you for listening, and we appreciate it, and have a fantastic day.